Hello friends, today we are going to talk about, we are going to study chapter 3 risk assessment and internal control. So these are the learning outcomes and this is the chapter overview. So once we are done with the chapter, I will help you create this chart and then it will help you to memorize and then have a fast recall. So this we would prepare in our own way, but after the chapter is fully completed. So let's come to the topic. First one is audit risks. So when we talk about risk, audit risk, what is the objective of audit? The objective of audit is giving an opinion by the auditor that the financial statement are free from material misstatement, whether due to fraud and error. So what would be the risk that we are talking about when we talk about the audit risk? So when an auditor's job is to check that the financial statement are correct or not. So the risk could be the financial statement are not correct, but the auditor is unable to find out. That is the definition of audit risk. So audit risk means the risk that auditor gives an inappropriate audit opinion. So whenever you are reading from the book, from the module, or from any notes, try to read it in a way where you can break the sentence. That way you are able to tell your mind of the important points. So like I have done here, auditor gives an inappropriate audit opinion. That is the first point, that the financial statement are materially misstated. So whenever somebody would ask you what is the definition or what is audit risk, you can just interchange it also. The financial statement are materially misstated, but the auditor gives an inappropriate opinion. So that is the risk involved. That is the risk which is called as audit risk. So it means that the auditor expresses an unmodified opinion when the financial statement are materially misstated. In such a case, not only what will happen if the auditor gives inappropriate opinion, see, he should have been given a modified opinion when the financial statement are materially misstated, but what he is giving is unmodified opinion. So in such a case, not only what will happen to the reputation of the auditor, it will get damaged, and it will invite regulatory actions from the professional body and could face legal consequences. So to avoid such unpleasant consequences, he should be reducing audit risk to a acceptably low level. By doing more procedures, how he can reduce the audit risk to a low level, we are going to see ahead in the chapter. So SA 200 state that the auditor should obtain sufficient and appropriate audit evidence to reduce audit risk to an acceptable low level, and thereby what will happen, it will enable the auditor to draw reasonable conclusions on which to base the auditor's opinion. So let's see what example they are talking about. For an example, the profit of the company have been increased artificially, showing fake revenues of sizable amounts in its financial statement. In such a case, financial statement are materially misstated. What happened is, you have a financial statement of a company. What happens is, they have genuine sales by other income. What they have done, they have added an amount. This is fake, right? Due to which these financial statements are now materially misstated. But what happened is, the probability that auditor in such case expresses an inappropriate audit opinion is referred to as audit risk. So when an auditor will audit this financial statement, by looking at the other income, he should be able to say that these are materially misstated, but he doesn't give an modified opinion, or isn't able to check that the other income is fake. So what will happen is, he'll give an inappropriate opinion. So that is what we are talking as audit risk. So it is the possibility that auditor will express an unmodified opinion when the financial statement are materially misstated. So see the last point, audit risk is a function of risk of material misstatement and detection risk. So this is a formula that we need to know. Audit risk is risk of material misstatement into detection risk. Okay, so we are going to we are going to see ahead what risk of material misstatement means and what detection risk means. So let's talk about this risk of material misstatement. So SA 200 states that the risk of So SA 200, that is overall objectives of auditor and conduct of audit in accordance with standards on auditing. What it says, SA 200 states that the risk of material misstatement is the risk that financial statements are materially misstated prior to the audit. So we spoke about audit risk being dividing into two parts, that is detection risk and risk of material misstatement. Let's see what risk of material misstatement means. So risk of material misstatement means prior to audit. See, when you are reading the sentence, we have broken the sentence, now will intermingle, right? So prior to the audit, that means audit have not started at all. So prior to the audit, the risk that the financial statement are materially misstated. That means when management is providing us financial statement, they are materially misstatement. We have not started the audit. So that type of risk is called as risk of material misstatement, right? So it means that there is a possibility of fraud or errors in financial statement before the audit. So what do you mean by a misstatement, right? We'll talk about this. Misstatement refers to a difference between the amount. See, first break the sentence. Difference between the amount. That means if in profit and loss account there is an expense, say to rent. Now rent is 10,000 per month. So for a year it will become 1,20,000. But what is happening is they have only written 1 lakh. Okay. So when they are writing as 1 lakh, you are saying that there is a difference of amount. We will call it as a misstatement. Okay. Now there is a difference between classification, right? One furniture, you have purchased a furniture that should have been under furniture set, but you have written it under plant and machinery to gain benefits. So that is also difference of classification, that also will be coming under this thing, misstatement. Presentation or disclosure of a reported financial item, and the amount, classification, presentation that is required for the item to be in accordance with applicable financial reporting framework, right? So financial reporting framework says that whenever you are purchasing furniture and fixture, it should be under the head of furniture and fixture, but you have taken it under plant and machinery. So there is you have done so the misstatement, because whatever the rules are there in applicable financial reporting framework, if other than that you have done, so that we say it as a misstatement. So if I summarize this, so whatever is in accordance with financial reporting framework, there is a difference of amount, classification, presentation, amount, classification, presentation and disclosure. Okay. So whenever somebody is asking you the definition of misstatement, so whatever the amount, see this thing you have to repeat, the amount, classification, presentation and disclosure which is according to the FRF is not here, there is a difference in what has been actually shown in the financial statement, then it is called as misstatement. Now let's read it again. Misstatement refers to difference between the amount, classification, disclosure of a reported financial statement item and the item of the classification presented that is required for the in accordance with applicable financial reporting framework. So it can happen due to error or fraud. It could be intentional as well as unintentional. So in both the ways it will happen, right? So let us see the examples of the misstatement. So charging of an item of capital expenditure to revenue. Let's suppose you have taken and you have built a floor above your building, so that is a capital expenditure that should have been capitalized, but you are showing it into the profit and loss account. So that kind of, if you do that kind of thing, it will be called a misstatement. Difference in disclosure of a financial statement item versus requirement in financial reporting framework. Okay, so let's suppose there is a contingent liability. We know as per applicable financial reporting framework it should be given as a footnote, but what you have done a provision into in the balance sheet. So that is a disclosure difference as per FRF. So that is also misstatement. Selection or application of inappropriate accounting policies. What are the examples of accounting policies? The method of using the depreciation, that is WDV, SLM. So wherever there was selection or application, like say WDV should have been used, you have used the SLM method. So that is again, this is a type of misstatement. So difference in accounting estimate of a financial statement item versus appropriate in applicable financial reporting framework. What is the example of accounting estimate? Bad debts. Okay, so what should have been under the circumstances should have been the bad debts, but you have increased it or decreased it, then that also is a misstatement. Intentional booking of a fake expense in statement of profit and loss account, like miscellaneous expenses and everything you have shown, so that intentionally you have shown, so that is also misstatement. Overstatement of receivables in financial statement by not writing off irrecoverable debts. That means bad debts you have not taken into account completely, and that is why the receivables are at a higher amount. So that is also a misstatement. So overstating or understating inventories, right? So these are the examples of misstatement. So where we started from the start, see, audit risk, that is that inappropriate opinion when the financial statements are materially misstated. In that audit risk, we had risk of material misstatement and detection risk. So we were studying about risk of material misstatement. What was the risk of material misstatement? Before starting the audit, the financial statement are materially misstated, and it could be because of one or the other reason of error or fraud. Okay, so the risk of material misstatement exists at two levels: overall financial statement level, the assertion level, for classes of transaction, account balances and disclosure. Okay, so we will study what is the overall financial statement level and what is the assertion level for class of transaction, account balance and disclosure. Okay, see, first one we said is financial statement level. So this is financial statement, or let's suppose this is profit and loss account. So here you have sales, you have other income, you have inventory, right, of xxx amount x. To purchases, to expenses. So what financial statement level says of risk of material misstatement is, so risk of material misstatement at overall financial statement level refers to risk of material misstatement that relate pervasively to the financial statement as a whole and potentially affect many assertions. Okay, so when we talking about financial statement level, so it could affect also purchases to also there can be misstatement in all, or it will relate to financial statement as a whole. So when the example of it is, the example of risk material misstatement having at the financial statement level is integrity of management. Integrity of management. Let's suppose the management is not integral, that means they are really they are into fraud and anything. So whenever they are going to compile the financial statement, those while compiling, they might have done fraud in any of the financial statement item. So when when we have an internal control weakness, we saw an internal control weakness, or if the integrity of management we found to be not proper, so we can say that the risk is pervasive to financial statement, because they are the one, see, the sales would be one employee would be doing sales, other employee would be doing inventory, so they will compile and give they will only give their own figures, but it's the management who is going to compile all and make the financial statement. So what we can say is that the financial statement, when the integrity of management is not proper, it will, the risk of material misstatement will be pervasive to the entire financial statement, and that is called as risk of material misstatement at financial statement level. Okay, now next is at assertion level. Next is at assertion level. So the risk of material misstatement at the assertion level are assessed in order to determine the nature, timing and extent of further audit procedure to obtain sufficient appropriate audit evidence. This will enable to express an opinion to at an acceptably low level of audit risk. Let's understand what we are trying to tell. Right now, this was at the financial statement level. Now we are talking about assertion level. Right, see, this term is used many a times, assertion level, at the assertion level, but students are unable to understand what the assertion level means. So now I am going to make you understand in very simple terms to understand what exactly is an assertion level. Okay, so again we are going with the same profit and loss account. Two purchases, to rent, to miscellaneous expenses, to stationery, okay, to sales, to inventory. XXX, 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 XXX. Okay, so at the assertion level, now what is an assertion level? Now this is called an assertion. This again, it will be called an assertion. This will be called an assertion. This will be called an assertion. This individually they are going to call as assertion. So whenever I say assertion, that means nothing but financial statement item. It could be profit and loss item also. It could be balance sheet item also. So to basically understand the general meaning of assertion means financial statement item. Now having the misstatement at assertion level means these purchases may be having misstatement, but this sales, inventory, rent, miscellaneous expenses and stationery would be correct. So we are talking about assertion statement level at this financial at this item level. Okay, so whenever they say at the assertion level, it means a single financial statement item level. So as we will go ahead, we will see what is the meaning of assertion, actual meaning and definition of assertion. There I will going to explain you what exactly what in depth it is the meaning for you now to understand what is assertion. That means whenever assertion word comes, you say the financial statement item, whether it is a balance sheet item or a profit and loss item. Okay, so guys, okay, so now next, the components of a risk of material misstatement. So we studied audit risk. Audit risk is risk of and risk of detection risk. In risk of material misstatement, we saw risk of material misstatement will exist at two levels: overall financial statement level and assertion level for class of transaction, account balances and disclosure. Okay, so in the next part of the video, I will explain you what are the components of risk of material misstatement, and I will explain you detail into what is assertion as we have talked. So I hope you have understood the video, understood the concepts in the video, and hope you guys would want to watch the another part. So till then, take care, bye bye, thank you.